I'm sure you've got a friend telling you, oh, don't buy, interest rates are so high. Not true. I'll tell you why. As far as the 2023, as the October market is going, you're going to hear, oh, it's a tough market. Well, we're comparing, when you hear that, we're comparing it to the COVID market, which is something we've never seen before. So, of course, expectations would be that this is not the type of market where things are flying out the door and people are paying multiples. We're kind of back to where we were when everyone just talked about real estate as it was. Here's the market. I found a house I like. I'm going to put an offer in. I get to inspect it. I didn't have to pay more than they were asking. This is not an anomaly. We just haven't seen it for a few years. And it's really proofed in the numbers. Yes, there's a larger amount of inventory. Is that a bad thing? No. It means that you're buying a home that you actually want. Remember the days when you were buying a home because it's close enough? You know, we're not talking about 2 heads of lettuce and this one's a touch bigger, I'll buy the iceberg versus the romaine. This is a $500,000, $1 million, well, I don't care what the price point is, it's the biggest purchase of your life. And you should really be able to get what you want. Well, now you're at that point. You get what you want. You have time. You have conditions. And those conditions are so important, not just for the buyer, but also for the seller. Did you have time to inspect it? Did you have time to talk to your bank? Are you comfortable with this sale? You've got time. Nobody's knocking at our door as well. That doesn't make a bad market. That doesn't make it a tough market. I think that makes it a balanced market. Inventory being where it is, balanced between buyer and seller. The price points. Okay, it's dropped, what, 5, 6, 7%. I think about 7%. That's not a huge drop. The level of sales have dropped about the same, 6%. That's not a huge drop in sales. And days on market, I think it went from 30 to 32 days average. Again, so it kind of looks like things are stabilized and they are where they are. Are interest rates a big factor? Of course. But when people say to you, wow, you know, interest rates are so high, but they're also talking about how prices have already come down to this nice lower level. And I'll tell you, when I was buying real estate when I was younger, I was so happy. I remember taking over a building at 13%, you know, and then it dropped to 11%, and then it dropped to 7%. Well, I looked like a hero. I'd rather have a lower principal amount and a higher interest rate for my investment, because the rates can come down, but the principal amounts, for those of you on a long fixed term mortgage, you know that the principal doesn't come down so much. So all of these things, it's a juggling act. Is it better? Is it worse? I think it's very similar now to what we're used to. When you're buying a bit lower now, you're selling a bit lower now, it's that difference, that delta. So when you buy high and you sell high, if you buy low and you sell low, if I told you the difference between the two for your upgrade or you're looking for a smaller space, whatever it is, if that difference is very similar to what we were used to, then we're looking at a market which is relatively flat. And that's not a bad terminology. Again, let's think back 2 or 3 years ago. Who was the excited person? The seller. Who was the disappointed person? The buyer. Finally, you're getting to a point where both people aren't completely happy. Both people aren't completely miserable. That's sales. That's the market. Some people feel they gave too much. Some people took too little. But in the end, you can make an informed decision without a gun to your head, without time pressing against you. This is the type of market, as much as we love as agents to have things just flying out the door, there's a level of stress for us too when we can't do due diligence as practitioners for our clients. So it's not a bad market. Is it a tougher market? Of course, compared to one of the wildest rides that we've had for a couple of years. We're balanced, in my opinion. Is this going to change overnight? No. I think if you start to see this leveling out of interest rates, and even in a couple dips, this is my concern. The market dips a quarter point here, maybe another quarter point over the next year and a half. I think it'll signal to buyers that it's time to go out there and buy again. Be cautious. I think that the predictions, and I'm not saying that the economists get it right all the time, but I have to say our CEO, Phil Soper, is very respected, probably the most respected in the industry, in the real estate industry. And he kind of called it as well when they were predicting that the market would tank, and it went wild. He's also predicting, we're seeing something that's mimicked out by CMHC as well, that it's going to be 6 or 7 years before we see rate drops in the 1.5, even 2 full points. That's a very long time to slow back down to the overnight lending of 3%. But that 3% is where economists say we have a balanced market. Right now, are we a touch high? But the level of default, 7 out of 10,000 homes. We are not seeing the stress on the homeowner at this point, and that is with rates being renegotiated and the sort. So the Canadian market is very strong. There's no fire sales out there because of the stress that's on there. So when's the time to buy? As always, right now. You're going to make your informed decision with what you can afford, with what you need, with where you want to advance your life. The market doesn't dictate what you do. And especially now, this market is set up to say, what do you want, when do you want it, and wait for it. And that's the nice thing that we're seeing for our clients, both buyer and seller.